Good morning, everyone. Welcome to Insurance Advisors Direct. And hold on. We just had a quick disconnection. But here, I'm just going to go ahead and introduce myself. This is Bernard with Insurance Advisors Direct. And, we are a full service FMO, uh, pretty much more in the Medicare space. However, we have branched out into the life and annuity side and just bringing more life insurance concepts to you. And with that, we've have a 5-part series of life insurance concepts. We're on our third series, which is planning for long-term care using life insurance. And just to recap of the first two, the first series of our life concept webinars was on the perfect product pitch, or meaning how to have that conversation and talk about the ideal savings account, or most are going along with Section 7702 planning. Then the second series was on our Vive Term Life platform, which is a accelerated way to offer term life insurance. With that said, you have some more after the presentation, but we have our strategic partner with us, Chris Schieffer, and it seems like he's having a bit of technical difficulties. So as soon as he chimes in with this, he will go over the life insurance and long-term care. Here we go. Take it away, my friend.
Bernard, thanks for the introduction. And everybody, again, my name's Chris. Me and Bernard work together. And what we're going to do here today is go through a presentation that we have that's available to each and every one of you. And it's something that you could use with your clients. And I want to tell you right now, before I go any further, this is absolutely huge. Okay. A lot of the advisors that I work with are selling tons. They're helping tons of their clients with long-term care. This is a huge need. And the big problem that people have always had with long-term care really is twofold. One, when do I buy it without having to pay too much or pay for too long? And they hate the fact that it's a use it or lose it product. You now all have to your fingertips the ability to get around both of those worries. So right here, planning for long-term care, what you need to know. I want to let you know at the bottom, if you all want to do presentations to some of your clients or to a group of people, Bernard and or myself would gladly do that for you, as long as you could bring 5 to 10 people to the presentation. We will then get, as you can see on the screen, the presenter name and presenter company. We will cater this right to you with the logo on the top right as well. I left those blank so you could see that. The next page here, we'd be able to have, all your stuff right here as well. So it is pointing directly to you, even if Bernard or me help you and do a presentation, which, by the way, we do these, and we have huge success with people doing that. All right, without further ado, what we're going to do today is we're going to go over what's considered long-term care. Why should I consider the potential long-term care needs as part of my retirement strategy? Folks, this is the big issue, okay? Many of you might help people with their Medicare. You might talk to people about their retirement. You might, maybe you don't, but here's the big issue. Long-term care will impact somebody's retirement or a couple's retirement if they don't properly plan for it. And this is why it's negligent for all of us not to bring this up. You need to make sure you're bringing it up. When is long-term care needed, right? What are the questions that I need to ask myself? Okay. That's the bottom line. You can see these things. We're going to go through them, but here you go, folks. Think about this. Who here today has ever had a family member or friend that's needed long-term care, right? I don't know if you know what the numbers are, but 2 out of 3 people above the age 65 will have a long-term care stay or need at some point in their life. Who on this presentation today on this webinar is currently a caregiver to someone receiving long-term care? I'm sure there's somebody. Who's thought about potentially needing to be a caregiver for a spouse, a relative, or friend? And has anybody here actually thought about it for yourself and put together a written plan on how it'll work and what you need, right? These are some of the things we're going to talk about and that we need to make sure that our clients understand. Understand my presentation today, so you guys know. I'm going to go on and off topic here, but I do want you to understand this presentation is designed to be client facing. What Bernard and me are trying to do is make you understand what some of the needs are that your clients have, in case you didn't know that, but also let you understand that this is something you could use. So when we talk about long-term care with our clients, right, there's really two types of care. There's informal methods, right? That's family, friends, people in the community, and there's formal methods, okay? Here's what happens, all right? In short, informal and formal assistance, should you be unable to perform what is known as activity of daily livings. This is when you need people to help you, right? What are the activities of daily living? Well, here they are. It's the things that you did this morning when you woke up, right? It's dressing, it's eating breakfast, it's the ability to wake up, go to the bathroom. It's the ability to wake up, get out of the bed and go take a shower. Okay, these things here, and essentially with long-term care, when people qualify for it is when they cannot meet 2 of 6 of those ADLs. Okay, so you need to, again, make sure your clients understand the impact of this and why they need it. It's not just about the fact that it is going to happen, right? It's about the fact that the cost is humongous. So the Department of Health and Human Services states that someone turning 65 today has a 70% chance of needing some type of long-term care services, right? Like I said, that's 2 out of 3 people over the age of 65. So if you're 65 and you end up needing care, all right, there's a great website out there. You could go type in long-term care cost, Genworth, something like that. And Genworth has a great website where you could punch in what the cost is and the whole thing. But Genworth, right, they're one of the largest, most respected long-term care providers in the industry. And what they've found, the average person's on claim for 4.3 years. All right, think about that. Right now, the average cost on the low end of being in a facility is $5,000 a month. And that's not even great stuff. That's with sharing a room with somebody else in just sort of a plain Jane place. $60,000 a year. That's over $250,000 that your client possibly could have lost of their retirement assets, of their savings, going to a long-term care event. You might say, well, if they're there for 4.3 years and they pass away, what's the big deal? Well, the big deal is if they're married, there's a spouse still at home that now has to live the rest of their life on an adjusted budget, right? They lose a Social Security income. They maybe lose some portion of the pension. Okay. And now their savings are short $250,000. This is when you find people moving in with their kids and different things happening. This is when you find that mom or dad, whichever one's still alive, can't enjoy those golden years and do the traveling and things that they wanted to do. Okay. Let's make sure that we're talking to people about this, right? So long-term care, it's not only for those that are physically impaired. You need to understand that there's cognitive impairments, right? We hear about Alzheimer's and things, dementia like that all the time. So after the age 65, the average life expectancy of somebody with Alzheimer's is 4 to 8 years, yet some live as long as 20 years with Alzheimer's and dementia. Imagine somebody living 8 years to 20 years with Alzheimer's and dementia that need care. It's going to wipe out your parents and the parents of those you talk to, or those that you are talking to. It's going to wipe out their assets. Understand, the person that stays at home that doesn't have this, they're able to keep roughly, different by state and county, but they're generally able to keep around $120,000 in a home and one car. That's it that these folks need to turn around and live the rest of their life on. I want you to understand that's why this presentation is huge for you to use with your clients. And that's why it's so impactful for you to get some webinars set up and discuss this with them. Before I move on with this, just so you know as well, 80% of all care in the first 2 years usually is done or tries to be done at home. And that's very, very important because we'll talk about that a little bit later. But long-term care, what's the deal, right? It's going to be needed when you can't perform 2 of 6 ADLs. There's other factors as well. Falls or accidents, chronic illness such as arthritis and back pain, strokes, or as we mentioned earlier, cognitive impairments. These are things that could cause long-term care to be needed for your client, your family. What are the questions that you need to ask, right? These questions are not only for yourself, but this is what you got to talk to your clients about. Planning for long-term care, it's really like trying to drink from a fire hose, right? There's a lot of information out there. It can become overwhelming. So when you look right here, here's how to boil it down. How could long-term care need to affect my family? How does it affect my retirement strategy? Where should I consider receiving care? What could it potentially cost? What are my options in covering that cost? What are the options? What do you have? This is where you, the advisor, come in. So the first question that you need to ask yourself, right? It's an important place to begin thinking about your plan for potential long-term care need because it's going to be the first thing your loved ones consider when helping you receive care, or if we flip this around, you helping your family, or when you're talking to your clients about this, right? You need them to understand first and foremost, you need to consider who's going to be given the care. This is what I was talking about. 80% of care in the first 2 years is given at home. Do you know who generally gives that? The oldest daughter or daughter-in-law. That's what the statistics show. What if this oldest daughter or daughter-in-law is 40, 45, 50, 55, 60 and still working, and her family needs her to work to generate money to be saved for their retirement dreams to come true? Now, when they have to take care of mom and dad, not only are they dealing with that, but it's hindering their own ability to retire. This is where you look at something like informal care, right? Who's provided for them. This is where it's important that you understand what type of asset and what type of insurance will cover this. Cost can vary depending on the ifs, right? Remember when I said about long-term care is like drinking from a fire hose? It's really because there's so many ifs, and you can see the ifs right here. It's important to have a written plan just in the event of a long-term care need, because these ifs can determine what the potential costs are going to be. Folks, I totally urge you when you're talking to your clients, ask them to write down what it is they want to happen, how they want that plan to happen. This helps you as the advisor to guide them on the right type of insurance program to put together based on what they want. It helps you. What do they need to put in there? Like, who's going to give the care and where is it going to be? How long should I receive the care by that person if needed? Facilities, cost, access, nurses, CNAs, your family, your daughter, the church. Who's going to be doing this? Who do you want to do it? How long do you want them to do it for? What are the triggers to move you from home to a nursing home? All these sort of things are what people need to really seriously consider and write down. Your job is to help them know the costs. Homemaker services, you could have somebody come in, adult daycare, assisted living, nursing home, shared or private room. What's it going to be? There's a lot of stuff to think about, and this cost is huge. So make sure that you work with your clients on this. But more importantly, make sure your clients know how detrimental this could be to them. So when you look at options, right, what are we looking at? Well, here's some of them. But first, let's talk about this. Why long-term care should be considered as part of your retirement strategy. The potential costs of long-term care. The potential costs of not having a program to cover that. You need to make sure these are things that your clients fully understand before you start talking about what the options are, right? So when you look at public programs, many people see Medicare and Medicaid as a good way, right? The government's able to help offset the cost of long-term care, and they would be correct, people who think that. But remember, The government will help offset that when you are broke, when you've run through all of your assets. You need to meet 2 of 6 of the daily livings to be able to get that as well. Understand that. So when you look at this, we got those public programs that are there. We got self-funding, right? What is self-funding? Well, it dictates a portion of your portfolio to address long-term needs. You can see it right there. But we need to understand, what are the potential risks, right? Market volatility, inflation, other income needs. So when we look at this, if we're just going to pay for it out of our pocket, where's your client getting the money from? Are they taking it from an IRA? Are they taking it from a brokerage account? What if they think they got enough money in there and now we have 2022 happen and their portfolio is now down over 30%? They've lost 30, 60, 90, $120,000 simply due to the market being down. And now it happens to be the worst time, right? They got to go into a care facility and now they have to sell and liquidate assets in a down market. It compounds itself. They need to understand this. Inflation, how's that going to impact the assets that they have sitting in a CD or the bank? They're going to lose buying power. And how does that impact the family member that stays at home? So when you look at, at these things, self-funding, you can see we got an individual up here. Unfortunately, this person's one of the 70% that requires long-term care. So where do we pull the funds from to help cover that cost? Well, it's up to this individual. They could use their savings, their money markets accounts, their income streams from annuities or IRAs, stocks, bonds, mutual funds, all this sort of stuff. And I just went through some of the impacts of that, right? They need long-term care, they can pull it out of there. All of these different assets they could use. Remember what I told you, savings and money market. Now that person left behind has less money to live on. Annuity streams, now there's less income for your client. IRA, stocks, bonds, mutual funds, down market. They have less money on top of the fact that they're selling into a down market. Real estate. They had some other real estate beside the home they live in. They decide they want to sell it. Well, the market's down. They don't get for it what they want. They're in a pinch and need to sell it quick, right? These are all problems that when people think they have enough money and they're going to pay for it themselves, I'm here to tell you, and I tell my clients this, you're out of your mind. It's not the brightest way to do it. The reason your client was able to amass savings and money market money, annuities, IRAs, stocks, bonds, mutual funds, real estate, was because they made smart moves. They did a good job of researching and bringing value to the money they had, and they made smart moves. Don't allow them to stop doing that when it comes to their long-term care needs. They need to continue to make smart moves for that as well. Informal care, right? We've gone through this when we're looking at options. So what does it mean? What are the things that you need to consider? Availability, proximity, physical, financial, emotional impact to the caregiver. But how could we help deal with that a little bit? Well, at the bottom, we're talking about long-term care. We're talking about insurance, right? Traditional long-term care insurance, life insurance with long-term care riders or linked benefit programs. These are things that could be used to help out. When we think about traditional long-term care insurance, what is it, right? Various needs and benefits it shows. The big thing that I want you to get out of here is it's reimbursement, okay? It's going to reimburse the cost of qualified care to you. So when you have traditional long-term care coverage, there are some downsides to that need to be considered. When we look at life insurance with the optional long-term care rider, right? What happens here? Well, you're essentially buying a bucket of money. You buy a $100,000 policy, there's $100,000 for long-term care. You buy a $250,000 policy, there's $250,000 for long-term care. This might not cover the total cost, but what it does do is it takes the stress off of all the other assets that your client has. The nice thing that you need to look at when you look at long-term care insurance off of life insurance is bullet number 2. It could be used for formal and informal care, and the premium's flexible and guaranteed to not increase. Where traditional long-term care insurance, it's health insurance, those prices are going to go up. And linked benefits, right? This is where you could take a client and you can move money from the left pocket to the right pocket. You could take $100,000 that they have that's lazy money that they're not going to use, move it over to a linked benefit. You could turn it into $250,000 of long-term care insurance that's going to be guaranteed not to increase. And it's going to also have a return of premium option. Great ideas there. So let's go through this. Traditional long-term care. If you need it, you have your long-term care benefit. Life insurance with long-term care, if you need it, you have your LTC benefit. If you pass away, you have your death benefit. Again, what's the difference? This one, all you have is a long-term care benefit. Your client could be paying $2,000, $3,000, $4,000 a year for 20 years. All of a sudden, they get a letter that says they're going to start having 80% rate increases phased in over the next couple of years, and they got to pay more and more and more on their premium. And you know what happens if they don't have a long-term care need? If they never use the benefit, the money's gone. It's use it or lose it. Life insurance with a long-term care rider, you have your benefit. On top of the fact, the premium will never go up. If you don't use it, there's a death benefit paid to your beneficiaries. You're not losing anything. And then we have linked benefits, okay? You have it. If you need LTC, it's there. If you pass away, it's there. If needs change, you're still alive and you don't want it anymore, you get your money back. Remember, the bottom line on what we're trying to do, the new age of long-term care and how we cover this stuff, and what most advisors are doing is they're using life insurance with LTC benefits because it's not use it or lose it. So folks, when you sit down and you talk to your clients and you go through this, make sure that you tell them how important it is that they get a written strategy put together, that they discuss it with you. You then help them understand how they could fund the different ideas or the different ways for long-term care. And right here, I mean, this is very easy. What should they include? The benefits, the benefit period, the type of care, right? The big thing that I want you guys to understand is by using life insurance with a long-term care rider, it's called indemnity versus reimbursement. And when you have an indemnity program, when we go back to what I was talking about, 80% of all care in the first 2 years is at home, and it's being delivered by the spouse or the oldest daughter or daughter-in-law is what the statistics show. Indemnity plans, as long as you meet two of the 6 ADLs, you don't need anything else. Money comes to you every month. You just get a check into your checking account every month for whatever the amount is. And with that check, your client now is able to pay that daughter or daughter-in-law that might be leaving work early, might have had to take a leave of absence from work. Maybe you're still got your mind and everything with you, right? But physically it's hard to move around. So that's why you're at home and you need help. And so now you have the neighborhood kid mow the lawn and shovel the driveway, right? You're going to have money to pay them. You're able to use the money for whatever you want to, as long as you meet 2 of 6 ADLs. So this is a big, big thing on when you're talking to people on what the differences are. When you compare that to long-term care, 2 of 6 ADLs, you have to have a medical professional that comes in. It's going to cost more money. You have to pay them every month, and it's reimbursement style. You pay the person, you submit receipts, the long-term care plan reimburses you. That's the general rule of thumb. So folks, right there, as you can see, it's a pretty slick, pretty straightforward, pretty autonomous presentation that you could use and go a few different ways with your clients. What I'd like to say now is if there's any questions, feel free to ask. And I would like to leave this call with this, please, any of you that want to set a time with Bernard to have a presentation given to some of your clients, the success that you're going to find by doing this is going to be huge. If you could get at least 5 people on, Bernard or myself will do this for you. And I assure you, every time we do this, we're able to get at least 1 sale out of that presentation, average compensation around $5,000 per sale. So please work with Bernard, get an understanding of this. Let him show you some of the other tools that we have wrapped around this that you could use to get people to a presentation, and let us help you increase your revenue this year by starting to talk about long-term care with your clients. So thanks for listening to me here. I hope I gave you some good information that you could bring out to the field starting today. Back to you, Bernard.
All right, thank you, Chris. Yeah, I think we see one question. How do clients enroll in an indemnity plan? Is this presentation recorded so we can listen to it again? Yes, the presentation is recorded. It will be on our YouTube page. Once it's all cleaned up, I will actually email you a copy of the presentation. And Chris, I'll let you answer the first part. How do clients enroll in an indemnity plan?
I don't see that. Where am I missing that question at? I guess what it is you sit down, and the way you enroll is give Bernard a call, and we'll talk about the couple of different programs that are available for that, right? You have to go, you basically fill out an application, and they do have to go through underwriting. We work with a good, I don't know how many different plans we have that do that, but there's a lot of them. So it's really about what's their budget, what do they want to spend, and getting an understanding, because you got to remember all of this stuff is based on health, right? So they are going to do underwriting, and those are some of the things we need, but I assure you it's really pretty simple to do. I hope that answers your question. If not, Bernard, why don't you just get a hold of the rep afterwards, and let's let them know how we could help them.
So yeah, definitely. Everyone's going to receive a phone call and an email after the presentation. But also, let me show you what else we're offering. Like Chris was stating that we will host a seminar, a virtual seminar on your behalf. But here's some of the things that we will also do for you. And Chris, if you can unshare your screen, stop sharing in this. I will share mine. And here's some of the things that we can provide for you. Of course, the presentation. We can customize the PowerPoint presentation however you want it. There are consumer handouts that you will also have access to that we can customize on your behalf here. Let me see where we can add your name, blah, blah, blah. You can send out to your clients. We also here, marketing letters. If you want to market to your clients, send them a little letter. We have pre-made letters. Let's download that and open it up. Let's see if we can get that open here.
Oh, it's weird. It's not opening.
Yeah, it's not. So what I'll do, I will email that to you as well. And then of course, the invitations for the webinars.
Those invitations there are for if you want to do an in-person seminar.
But we can customize it to fit a virtual seminar.
If you go down to that other one, Bernard, right down, nope, next one down. This one's designed for a virtual webinar seminar thing. It's very nice. You can see at the top, join us for a webinar event. Folks, if everybody could hear me still, I want to let you know, don't take what I say the wrong way, but don't drop the ball. Don't miss the opportunity. This is huge with people today. Okay. And if you're seeing clients and you're talking to clients, you got to talk about this. And if you need to get more people to talk to, use the marketing tools here with the prospecting letters, with the invite to webinars. Like I told you, Bernard and me offered the ability to help you. All we ask you to do is get at least 5 people there. Work with Bernard to figure out a time, and it's unbelievable the success that could be had by doing this.
Exactly. So one of the things is that we do ask, just get appointed with a carrier that will allow you to have access to that. And then what Chris and I do when you have clients that are looking for long-term care, send me the information. We're going to put our heads together and find the best possible product that will work for that client, instead of telling you here, get appointed with such and such carrier, when it may not work for that client. But we do ask for just one appointment so we can get that going for you. Yes. So Most definitely. We also have a graphics team that can help you with your website if you like. And yeah, and those marketing tools. Yeah, yes, sir. You can post that on your website as well. All right, folks. Like Chris said, let's not drop the ball because agents are having success with that, especially with the virtual seminars that we are doing. And then we can also host it on our Zoom platform. If you don't have one of those type of platforms, we can definitely use ours to help you out. So we'll be behind you 100%, helping you to simplify your success. So folks, if you don't have any other questions, like I said, you're going to get a call from myself or a gentleman that I work with here, Ben Groves. So we'll reach out to you, answer any questions you may have, get you contracted with just one carrier that probably actually Protective they have a very good long-term care writer with their policies, and we'll get you going. So folks, with that, everyone have a safe and happy Memorial's Day, and we'll talk to you soon. So actually we're having our, and I'm sorry, I forgot, we're having our fourth webinar next week, next Wednesday, on infinite banking, which is a huge concept. Then the fifth and final one would be on our tax diversification strategies. So folks, thank you again. Enjoy your Memorial Day weekend. Take care all. Bye.